Welcome to Stocksnipertrading. In today's tutorial, we will be going over and discussing the bearish engulfing candlestick pattern. The bearish engulfing candlestick pattern is one which completely engulfs a previous bullish candle. On the left, we have a bullish green candle which opens and closes at the top, and our next is our continuation of our bearish engulfing candle. The bearish engulfing candle opens at or above the previous bullish candle's close, and it goes down where it completely engulfs the previous green candle, and the bearish candle closes below the previous bullish candle's open. This illustrates that the bearish candle completely engulfs the previous bullish candle, where there is more sellers than there is buyers, and it leads to a continuous of a downtrend. On the left, we have an example of a bearish candle. We can see that it has A, B, C, D, which represents the open, high, low, and a close. A, we have a bearish candle which opens at the top, and we have a upper wick, which is B, which represents the high of the time frame, and we have C, which is the lower wick, which represents the low of the time frame, and finally we have D, which is the close of the bearish candle. And we have A and D, which represents the open and the close and the body of the candle, which shows the red bearish body, and we have B and C, which represent the high and the lows of the time frame, represented by the upper and lower wicks. And all candlesticks have the same characteristics, but they do have different time frames that you can trade them on. So for example, you can trade this candle on a 1-minute time frame, 5-minute, 15-minute, hourly, or a daily candle, but they all have the same characteristics of an open, high, low, and a close. The bearish engulfing candlestick pattern is a technical chart pattern. It is an engulfing pattern. It is a reversal pattern, and it is considered to be a sell zone. A bearish engulfing pattern is a technical chart pattern that signals lower prices to come. It is a large bodied red candle that completely engulfs the full range of the preceding green bullish candle. The larger the body, the more extreme the reversal becomes. The body should completely engulf the preceding green candle body after an uptrend of 3 or more green bullish candles, thus establishing a reversal pattern and a new bearish downtrend where sellers outweigh the buyers. The bearish candle opens at or above the previous bullish candle's close. The length of the bearish candle completely engulfs the previous green candle and closes below the previous bullish candle's open. The volume should increase to at least double the average when bearish engulfing candles form to be most effective. This is considered to be a sell zone with added confirmation. So this is a technical chart pattern. On the left, you can see we have 3 bullish candles, all making higher highs and higher lows, which is an uptrend, but we are reaching a level of resistance where we have a lot of sellers at this resistance level from a higher time frame. And now we have our bearish engulfing candlestick, which opens above our previous green candle and completely engulfs it and closes below it. This illustrates that there's more sellers than there is buyers, and the momentum continues to the downside on a bearish downtrend. This is an example of a bearish engulfing candlestick pattern from our TradingView charts. This is GBP USD on 5-minute time frame candlesticks. As you can see, we have an established support level where we do have buying momentum. B, we have a bullish uptrend of multiple bullish candles, all making higher highs and higher lows, leading to our C, which is our resistance level on a higher time frame where we have selling pressure, and we can tell by the upper wicks on those candlesticks. D, we have our bearish engulfing candlestick pattern, which opens at the close of the bullish candlestick at a level of resistance and completely engulfs it. And E, we have our bearish downtrend where we have bearish candles making lower lows and lower highs, all started by the bearish engulfing pattern. And F, we have a pullback with bearish continuation. So we have some buying momentum, but we have more selling pressure as it continues with its downtrend, continuation of its downtrend. And this was all started with identifying the bearish engulfing pattern at a level of resistance. Let's take a look at how it looks in a video format. Okay, so we have our bullish candles at the support level, and now we're making higher highs and higher lows. This is the uptrend, but eventually it will reach a level of resistance. So we reach our level of resistance here, and now we have a lot of selling pressure where we have a bearish engulfing candlestick printed, where it opens at and completely engulfs our previous bullish candle from the uptrend, and now we could be establishing a new reversal pattern and a downtrend. We just need to wait for added confirmation candles. Our next candle, you can see, continues as it opens below the close of our bearish engulfing candlestick pattern. This is a confirmation candle where you can get into a sell with a proper stop loss, and you can ride this momentum down until it reaches a level of support or continuation again after a pullback. So we have our downtrend, and now we reach a little level of support here. This is our bearish family of candlesticks. From left to right, we have the most bearish to the least bearish, and we will be discussing all of these candlesticks throughout our next tutorials. We have our bearish engulfing candlestick, which is filled with bearish selling volume, which we just discussed. B is our shooting star, which is a trend reversal. C is a bearish harami, which is a neutral candle. D is our bearish pin bar, which is a trend reversal. E is a spinning top, which represents indecision. F is a hanging man, which is a trend reversal. G is a doji, which represents indecision. And finally, H is our gravestone doji, which is a trend reversal candlestick. Please refer to these candles throughout your studies. The bearish engulfing candlestick pattern is a technical chart pattern. It is an engulfing pattern where a bearish candle completely engulfs a preceding bullish candle. It is a reversal pattern where we have an existing uptrend of bullish candles, and now we get our bearish engulfing pattern, which reverses the uptrend to a downtrend, and we have new bearish momentum as sellers outweigh the buyers. And this is considered a sell zone with added bearish confirmation candlesticks. We hope you enjoyed this tutorial, and on our next tutorial, we will introduce the bullish hammer candlestick pattern.